This is December 19th, 2013, current time 10:51. This is Jay Meisler with the Global View Daily Forex Video Market Update. This one may run a little bit longer than normal because there's a lot to say, and I think it's worth it because I'm also going to focus on what we can look for and look at going down the road. Yesterday's FOMC continues to reverberate in the markets. As I mentioned yesterday in my video update, it was only a matter of when, not if, the Fed would taper, and that any taper announcement would be accompanied by a strong emphasis on the forward guidance where tapering is not tightening and rates would stay low for an extended period. Well, the Fed surprised by announcing in December, as most expected, the earliest being in January, but didn't surprise with its forward guidance. Market took the latter to heart. Stocks rose sharply. The dollar, after a volatile initial reaction where the euro dollar, for example, fell to 137, rallied to 138.11, which by the way was a resistance, then plunged down through 137. Dollar yen skyrocketed above 104, which is now replaces 103 as a pivotal level, with 105 looming above. As far as the Fed goes, we now are in a period where the market's going to expect a moderate pace of tapering until the $85 billion in bond purchases are done. Does it mean that from month to month the Fed could surprise with a smaller amount, doubtful of a larger amount, depending on economic data, and even skip a month? So we do have possibility for some volatility, but the Fed has started the process and it will unwind it probably at a slow pace. And if it does it on a $10 billion a month, the market will just anticipate it and then discount it in advance. Whatever the case, the dollar has reacted. Remember, this is a time of year when markets are generally not making big bets and they are adjusting positions, so we can't rule out any profit taking or any book squaring for the next couple of days. We only have 3 full days left until the start of the early close on the 24th before the Christmas break. So we're getting into thin period. So just be aware of that when you're trading. One word about looking forward, and this is what I wanted to discuss. The reason the Fed is able to issue this forward guidance is has the cover of inflation. This is something I will talk about in the future. You know, inflation is in the eyes of the beholder. If you're sitting there like I have been doing, where my health insurance has doubled in the last several years, sometimes getting over 20% a year increase. If you fly, you see air travel rise with hidden costs such as charging for bags in the U.S. For domestic travel, rents have gone up. Those taking Obamacare are going to see their monthly bills, cost of health care go up. If you're paying for college insurance, college tuition has gone up here in the U.S. Steadily. And of course, wages are stagnant. So, but we live by government statistics, and that's what we're going to focus on, despite what I think is a higher cost of living than numbers show. And this is what you have to look forward to in the future. The market is going to become at some point preoccupied with inflation because the Fed can maintain its forward guidance as long as inflation remains low. If it starts to creep up, the market is going to start to discount or start to anticipate a rise in the Fed funds rate. So CPI, PCE, PPI are all going to become increasingly important as time goes on. But for the moment, as long as inflation appears to be contained, the market will assume the Fed will hold off raising rates for as long as possible, and not in the immediate future. As for the market now, we have this is what I've been pointing out all week, that if we failed at 138.30, we would come back down, reversion to mean, which is a 20-day moving average. We have it at 136.47. The trend line below that is 136.07. The 50-day moving average is 136.04. So we've had a reversion to mean right now. If you're looking for a good source of chart points, just by the way, if you go to Global View and you look under the Tools tab, FX chart points, we have a wonderful place, a wonderful source of rates. This part is cut off here, but here's your 20-day moving average, 136.47, 50-day 136.04, 100-day is distant at 134.88. The overnight ranges, we cover all the major currencies, plus more. Fibonacci here, pivot points, average, daily range, etc. So remember, it's under the Tools tab. Now going back to our charts here, as I said, 136.47, which makes 136.50, which is my, everybody knows that's kind of what my magic level is. It's one of my key levels, key indicator. 137.50 was the focal point. Now it's 136.50. That needs to hold to keep the downside in check and away from this trend line and 50-day moving average. While within 136.50 to 137.50, 137 is going to set the tone. And we can discuss 137 in a second. Looking at the 4-hour chart, broke the 100-period moving average. The breakdown level was right here at 137.09. All right, and we have a support here at 136.21, and the 200 period is distant right now, 135.74. Looking at the 1-hour chart, below the 100 and 200-hour moving average, the breakdown here was 137.09. We had 137 around 20 was the low yesterday prior to the FOMC, and 137 was the initial low following the FOMC before the failed rally above 138, and then the plunge back below. So if you're looking for a resistance level today, I'd say 137 figure to 20. It's 137 figure to 10, and then 137.20. So it makes it 137 figure to 20. But 137, the figure, is probably going to set the tone while within 136.50 and 137.50. The importance of 136.50. It's also the 20-day moving average and has potential to check the downside, as that was kind of a mini breakout level for this move over 138, that along with 134.50. So it has some significance beyond the 50 level. We bounced off it. As I said, we are in a thin period where position adjustments more than fresh positioning generally dominates, so you have to treat this day a little bit different. Watch U.S. data today. Weekly jobless claims are coming out. And that's it for now. I said I think one other level you can watch, at 136.80, which is another one of my magic levels for those who follow me. The 50, the 80, the figure level. There's a battle going on right now, and 136.80 is going to be important. If it gets established as support, the market will make a run at least at 137 figure to 20. If it becomes resistance and holds, then 136.50 is going to be the target. If you want to see more like this, visit www.global-view.com, or you can contact me directly at my email, j@global-view.com.